Good evening, all. On behalf of WRC, I welcome all of you for the webinar series on direct tax. I request CMA Dakshish Chokshi sir, please start the session. Dakshish sir, hello. Sir, please start the session.
Oh, sorry. I already started it. I was on a mute, so I just forgot to unmute myself. Okay, let
Yes,
me
sir.
start
Yes.
again. Okay, let me
Okay, sir.
start again.
Okay.
Let me start again now. Just give me a moment. Good afternoon, everyone. Today's topic on webinar series on income tax is deductions under Chapter 6A. My voice is now audible?
Yes, sir.
Okay, thank you. Yesterday we discussed about tax deducted at source, TDS. And as I said yesterday, TDS was little tedious topic. As compared to that, our today's topic, deductions under Chapter 6A, is little a simpler topic. This webinar facility has given us the flexibility to attend number of seminars sitting right in the comfort of our home or office. Members might be knowing that today our institute at the central level, Banking and Financial Services Board, has also planned one webinar on anti-money laundering, which is also an important subject. The timings for that seminar is from 6 p.m. to 8 p.m. So for those members who might be interested to study anti-money laundering, let me tell you that today's topic, our topic, deductions under Chapter 6A, is little simpler topic, and we would be in a position to finish the today's discussion little bit earlier than the scheduled timings. So the members would have the flexibility, those members who are interested to participate in that webinar of anti-money laundering would have the time to partly participate in that webinar. May they not be able to fully participate, but they would be definitely able to have a glimpse of the participation. So with this background, let's start the today's topic, deductions under Chapter 6A. Income tax makes provision for various deductions. So these benefits are given to us for certain specific investments done. So when we make certain specific investments, the income tax department provides us the benefit in the form of deductions from the income tax payable. Certain benefits is given for certain specific expenditure incurred. So when we incur certain specific expenditure, the income tax department gives us the benefit by way of deductions from the income tax. So these benefits by way of investment or by way of expenditure are based on socio-economic need of the country. As an SSC, this helps us to reduce our gross taxable income, and in turn, it reduces our tax outflow. But one thing we need to understand that we are required to claim these deductions while filing our income tax return. When we talk of Chapter 6A, Chapter 6A consists of number of sections. Section Chapter 6A is basically under 5 headings. The heading A speaks about general sections, which are section 80A to 80B. Then we have got heading B, deductions in respect of certain payments, which starts from section 80C to 80GGC. Then in under heading C, deductions in respect of certain incomes, we have got sections from 80H to 80TT. This heading, section C, is mostly for business or industrial undertakings. And then we have got heading CA and heading D about other deductions. So the Chapter 6A starts with section 80A, which says about deductions to be made in computing total income. Then we have got section 80B, which says deductions to be made from gross total income. And 80AC says no deductions are allowed without furnishing the returns. So these sections are very general sections, and the main sections for the deductions starts from section 80C, which is very well known sections. etc deductions for certain payments and investments. Then we have got section 80CCC triple C, contribution to pension fund. We have got section 80CCD, contribution to national pensions scheme. Then we have got section 80D, payment of medical insurance premium. Sections 80DD, maintenance of handicap dependent. 80DDB speaks about medical treatment. Then we have got section 80E, interest on loan for higher education. We have got sections 80EE, interest on loan for residents. Then we have got sections 80EEA, interest on loan for certain house property. Then we have got sections 80EEB, interest on loan for electrical vehicles. Then again we have got section 80G, very known famous sections about donations. Then we got sections 80GG, which speaks about payment of rent. Then we have got sections 80GGA, donations for scientific research or rural development. Then we have got section 80GGC, which speaks about contribution to political parties. Then we have got sections 80QQB, royalty income of authors. Then we have got sections 80RRB, which speaks of royalty on patents. Then we have got sections 80TTB, interest on deposits by senior citizens. And then we have got sections 80U, which speaks about persons with disability. So with this background, let's start studying the section wise details. The general sections, section 80A speaks that deductions specified in section 80C to 80U will be allowed in computing total income of an SSE. The main characteristics of this deduction is that these deductions cannot exceed our gross total income. So after applying these deductions, if the amount of deductions is more than the gross total income, resulting into negative gross total income, then it is such a negative figure is required to be ignored. It will be the reductions will be kept limited to our gross total income. Another thing is, if any deduction is allowed to AOP or BOI, the member of AOP or BOI cannot claim their share of deduction individually, and no deductions are allowed unless claimed in the ITR. Then we have got sections 80B, which says that for the purpose of calculation of deductions, the income computed as per income tax provisions shall alone be regarded as income received by the SSE and which is included in his gross total income, and not the actual income earned or received by the SSE. So for the purpose of claiming declarations, whatever is mentioned as per the IT provisions in his gross total income will be deemed to be the income. And for the purpose of calculation of deductions under the heading, that is C, deductions with respect to certain income, the income computed as per income tax provisions shall alone be regarded as income received by the SSE and not the actual income earned or received. Further, no deduction under the heading shall be allowed unless the ITR is furnished before the due date of filing of the return. Now this heading, which is heading C, title as deductions in respect of certain income. This heading speaks about the deductions which are available to various business or industrial undertakings, and These reductions will not be allowed unless income tax return is furnished before the due date. So if the return is not filed before the due date, the undertakings will lose the benefit of those reductions. So for those undertakings who want to take the benefit of these deductions, they need to ensure that the return is filed before the due date. Let's start now with the deductions. First is Section 80C, which allows us deductions based on certain payments or certain investment or certain deposits. This is, I think, most of the participants are the members, and they would be very well versed with Section 80C. Individuals and HUFs can take benefit of reductions under these sections, and the whole of the amount paid or deposited, subject to maximum of rupees 1,50,000, is allowed as deductions under these sections. Now, what are those eligible payments which would be subject to section 8 deductions under section 80C? Those payments are, there's a very long list of payments. There's life insurance premium, then deferred annuity premium, then recognized provident fund or public provident fund, then superannuation fund, then we got NSC, then we have got unit link insurance plan, then we have got tuition fees to any school and college for maximum of 2 children. Then we have got unit linked insurance plan of LIC mutual fund. Then we have got contribution to approved annuity plan of LIC. Then we have got subscription to notified units of mutual fund or UTI. Then we have got contribution to notified pension fund set up by mutual fund or UTI, and contribution to National Housing Bank tax savings term deposit scheme, notified deposit scheme of public sector companies providing long-term finance to housing sector. Then very important, repayment of housing loan, including stamp duty, registration fees, and other expenses. Investment in 5-year term deposit, notified bonds issued by NABARD, then deposits in Senior Citizen Savings Scheme Rules 2004, then 5-year post office time deposit, and contribution to National Pension Scheme. So once we make the deductions or investments under this head, we would be eligible to claim the reductions toward the whole amount paid or deposited, subject to maximum disallowance, maximum deductions of rupees 1,50,000. As far as payment of insurance premium is concerned, the insurance policy can be taken in the name of self or spouse or our children. Now, children may be dependent or may not be dependent. Children may be married or may not be married, or they may be minor or they may be major. All children would be covered under this aid. But only the criteria is that insurance premium, payment of insurance premium cannot exceed 10% of the sum assured. So in 1 year, we would be able to claim reductions only to the extent of 10% of the sum assured policy, sum assured value of the insurance policy. Say if the insurance policy is of say sum assured is say 10 lakhs rupees, then 1 lakh rupees we cannot claim insurance beyond 1 lakh. That is 10% of the sum assured in 1 year. Next section is 80CCC, which speaks about deductions for contribution to certain pension funds. Any individual can take benefit of these sections. Whole of the amount paid or deposited in LIC or any other insurance company in the approved annuity plan would be eligible for deductions under this aid. These deductions, the upper limit is 1,50,000. This 1,50,000 would be counted along with the deductions limit of ATC. Another thing is, if after claiming deduction, if the annuity is surrender, then the surrender value becomes taxable. And like this policy is for annuity plan is for receiving pension in the future from such funds. So in future, whenever we receive such pension, and if earlier we have claimed deductions, then pension received will be taxable. Then we have got very important scheme about National Pension Scheme, that is ATCCD. Any individual can take benefit of this section. Contribution to Atal Pension Yojana or National Pension Schemes is eligible for deductions. Now, maximum amount of deductions is limited to 1,50,000 along with ATC and ATCCC, but there are certain criterias. Under ATCCD 1, 10% of the salary for employees and 20% of gross total income for self-employed. Under ATCCD, if contribution to NPS by employer, if employer makes contribution to NPS scheme on behalf of the employee, then it would be restricted to 10% for non-government and 14% for the government. And under ATCCD 1B, additional deduction of rupees 50,000 is allowed. So what happens when this is withdrawn? So when it is partially withdrawn, up to 25% of employees' contribution is exempt. If the account is closed or someone opts out of the NPS, then 60% is exempt. And pension received, like in the earlier case also, whatever is the pension received out of NPS schemes becomes taxable when received. Another important section is section 80D, which speaks about deductions on payment of insurance premium for mediclaim insurance premium. Any individual and HUF both can take benefit under these sections. The deductions are like this. Medical insurance premium paid up to rupees 25,000 is straightway deductible. If if mediclaim is paid for our parents, then we get additional deduction of rupees 25,000. And if our parents are senior citizen, then this limit of rupees 25,000 gets increased to rupees 50,000. So for payment of medical insurance, we get for ourselves and our family 25,000, additional 25,000 for parents, and if parents are senior citizen, then we get 50,000. Same way, medical expenditure incurred for self or any family member for whom the medical insurance premium is net paid, then we get additional deduction of rupees 50,000. So the aggregate of A plus C, that is the whatever is paid for us and the family except the parents, cannot exceed 50,000, and total deductions for the parents cannot exceed 50,000 rupees. So aggregate payment, further to this, we also get deduction of rupees 5,000 for payment of preventive health checkup. Then we have got sections 80DD, maintenance of a person with disability. If we have got anyone in the family who has got some disability, then certain deductions is allowed, which is rupees 75,000. And if the disability is over 80%, then reduction of 1,25,000 is allowed. For claiming these reductions, we need to obtain a medical certificate to this effect. And when we issue the medical certificate, they also prescribe the percentage of disability. Individual and HUF both are eligible to claim these deductions. If medical expenditure is incurred for the self or dependent, then this it is eligible for deductions. And if it is incurred by HUF, then medical expenses should have been incurred for any of its member. Now, under the Act, they have specified certain diseases. So if the expenditure is incurred for treatment of such specified diseases, then the reduction up to rupees 40,000 is allowed. And if the medical expenditure has been incurred for senior citizen, then the limits get increased to rupees 1 lakh. Then we have got section 80E, which speaks about interest on loan taken for higher education. Here, any individual can take benefit of these sections. The loan should have been taken from any bank or financial institution or any approved charitable institutions. And the reductions would be is allowed up to 8 assessment years. So once the interest payment falls due, then from that date, 8 assessment years would be calculated, and up to 8 assessment years, the deduction for interest on loan taken for higher education will be allowed. Then we have got sections 80 EEE, interest on loan taken for housing property. Any individual can claim benefit under these sections. Interest on loan should have been taken from any bank or housing finance company for residential housing property only. The criteria is sanction of the loan should have taken place from 1/4/19 to 31st March 2022. Stamp duty value of the house should not be more than rupees 45 lakhs. And the condition is stamp duty value of the house should not be more than 45 lakhs, and assessee should not own any other residential house property on the date of the sanction of the loan. So what is relevant here is the date of sanction of the loan. Suppose the assessee uh, gets the loan from the bank in say January 23, sorry, January 22, and where he was having only one house, and after 1 month or 2 months he purchases another house, then also he will be eligible to claim reductions, because the criteria is on the date of sanction of the loan he should not own any other residential house property. Here the maximum reduction is rupees 1,50,000 rupees. Now, under the head income from house property, under section 24, we also get deductions for interest on housing loan. So where the limit is up to 2 lakhs rupees. So these deductions of 1,50,000, if the SSC is qualified under both the sections, that is section 24 and section 80 EEA, then he will be able to claim the benefit under both these sections. So these deductions under section 80 EEA of rupees 1,50,000 is in addition to limit specified under section 24. Then Section 80 EEB, interest on loan taken for purchase of electrical vehicle. As we know, the government wants to give more benefit or wants to expand the base of the electrical vehicle. So to encourage the purchase of electrical vehicle, interest on loan taken for purchase of such vehicle is allowed under as a deductions under section 80 EEB. So interest on loan taken from any bank for purchase of electrical vehicle is allowed subject to maximum reduction of rupees 1,50,000. But this is available if loan is sanctioned only up to March 23. Then we have got sections 80G, which is a very known sections where donations made to any eligible fund or institutions gets qualified for deductions. Now they have specified number of large categories of donations. Like if we classify these categories, these categories can be classified under various heads. Like those categories, those donations which qualify for 100% deductions without any qualifying limit. Then we have got certain other deductions which qualify for 100% deductions, but they have got an upper cap. There is a qualifying limit. Then there are certain donations which are eligible for 50% of the deductions without any qualifying limit. And then we have got certain deductions which are in these presentations. I have not tried to include the long list of such donations, but for the benefit of the members, let me try to read it from the act. Like those donations are where there is no maximum limit and deductions is available to 100%, is like National Defense Fund. Then we have got Prime Minister's National Relief Fund, then National Foundation for Community. Then there are a number of such sections like national bond transformations, one set up by the state government, even National Sports Fund or National Cultural Fund. And then there we have got a separate limit where reductions up to 50% is allowed, which are like Jawaharlal Nehru Memorial Fund, Prime Minister's Dot Relief Fund. Then we have got Rajiv Gandhi, Indira Gandhi Memorial Trust and Rajiv Gandhi Foundations, where deductions up to 50% is allowed. So for claiming the benefit under these deductions, first we need to understand gross qualifying amount and not qualifying and net qualifying amount. Gross qualifying amount is aggregate of donations made to eligible fund or institutions. So that would become amount A, gross qualifying amount. Now, from gross qualifying amount, we have to arrive at net qualifying amount. So while arriving at net qualifying amount, we have to deduct certain items from the gross total income. Like from gross total income, firstly we will deduct whatever reductions we have claimed under sections 83C to 80U. Then we have to reduce the income on which tax is not payable. Then from gross total income, we have to reduce long-term capital gains and short-term capital gains taxable at 10%. And then we have to reduce incomes referred to in section 115A, B, and AC and AD. So from gross total income, if we deduct this amount, we will get the not qualifying amount. The criteria is this net qualifying amount cannot exceed 10% of our gross total income. So if this net qualifying amount, then such net qualifying amount would be restricted to 10% of the gross total income. Another criteria is donations in the kind are not eligible for reductions. So donations has to be made in the form of bank payment or check payment. And if donations is made in cash, then the maximum amount which can be claimed is rupees 2000. So donations in cash exceeding rupees 2000 are not eligible for deductions. Then very important section is section 80GG, which is payment of rent. So who is eligible? So any person who pays rent for his residential accommodation and is not in receipt of HRA. So the person can be employee or self-employed. If he is paying the rent and is not getting the benefit of house rent allowance from his employer, then whatever rent he pays, he can claim reductions subject to certain conditions under these sections. So the rent payable paid by him is available as reductions from his total income. Now, what is the deductions amount? Maximum reduction is rupees 5,000 per month. Subject to an upper limit of rupees 5,000 per month, another criteria is it would be restricted to 25% of his total income. Now, total income will not include capital gain, and total income would be after deductions under section 80C to 80U. And third criteria is actual rent paid less 10% of the total income. So if the payment of rent is less than 10% of total income, then this amount, criteria 3, would become 0. And so he would be not, he would not be eligible for any deductions. So the deductions will come into play only when the payment of rent is more than 10% of his total income. So list of the three, like 5,000 per month upper limit, then 25% of total income. Total income will exclude capital gain and the deductions under section 80C to 80U, and 10% of the total income. Actual rent paid less 10% of whatever the difference. The criteria, the other conditions are is for claiming these deductions, the accommodation should be occupied by the assessee for his own purpose. If he is paying rent for some other property where he is not residing, then he cannot claim benefit under section 80GG for payment of rent. Another criteria is he should not own any other house, either in his name or in the name of spouse or in the name of minor children or in the name of HUF of which he is a member. So these persons like SS's spouse, minor children and HUF of which he is a member should not own any other residential accommodation where he normally resides or perform his duties. So where he normally resides is staying there, and wherever at his business place, and is uh, occupied a rented house, but any of these members is already having another house at some other locations in the same locality or in the same city, then this benefit is not available. Another criteria is if he own residential accommodation at any other place, but concession in respect of self-occupied house property is claimed by him. Now, this deduction of self-occupied house property is available to him under the head income from house property. So, under the head income from house property, if he is claiming the concession, in respect of self-occupied house property, then also he cannot claim any deductions under these sections for the payment of rent. Then we have got another sections 80GGA, which speaks about donations for scientific research and rural development. Now, this deductions is available to any SSC whose income is not chargeable under the head income from business or profession. So, any person, any SSC who is not into business, is neither into business nor into professions, he can claim the benefit of these sections if any donations is made for some scientific research and rural development. So, what will be the eligible deductions? Any sum paid to research association or approved university or college undertaking scientific research. Next is sum paid to public sector company or association or institution approved by the national committee for carrying out eligible project or scheme. So if an SSC makes payment to any of such institutions, then he will be able to claim deductions of such payment. And once he has claimed deductions under these sections, he cannot claim the same deductions under any other head. If that deduction is also qualified for claiming deductions under other head, then he cannot claim such benefit twice. And if payment, it is essential that payment is made by way of check. If payment is cash, then deduction of more than 10,000 will not be allowed. So even if for cash payments, deduction would be restricted to 10,000. Then we have got sections 80GGC, which speaks about contribution to any political parties. Now, in my consultancy, I have seen number of salaried employees try to take benefit of these sections. We have got number of registered political parties who may not be active, but they have got the registration as political party, and they indulge themselves in such type of activity like giving accepting the donations through some route. So contributions made by any persons to a political party electoral trust is eligible for deductions. However, if it is a cash payment, then no deductions is allowed. So those before making any contribution or before claiming any deductions under Section 80 GGC, it would be advisable to ensure that the political parties are genuine, because in the recent times we have seen a large scale of search operations being carried out by the income tax department to unearth such unreal transactions whereby certain on paper political parties create the paper transactions of such donations and indirectly pass on the benefit of such deductions under Section 80 GGC to the SSCs. And my experience is that such kind of activity is carried on more by the salaried employees who are on a because they have got very limited window to manage that tax liability as compared to those who are in the business or self-occupied. Then we have got sections 80QQB, which speaks about royalty income earned by the authors. So if any author earns royalty income, then he is eligible to claim deductions under section 80QQB. To claim these reductions, the book written by the author should be that of literacy or of artistic or of scientific nature or of royalties or for copyright fees. So maximum reductions is 3 lakh rupees. Another criteria is this amount of eligible income by of royalty should not exceed 15% of the value of the books sold during the relevant year. Lakhs, then the restriction would be 15% of the value of the book sold. It cannot exceed more than 15% of the value of the book sold. And if any income is earned from any source outside India, then is required to brought into India such income within a period of 6 months from the end of the relevant previous year in which such income is earned. So it's very simple. Uh, Book should be of literacy, artistic, or some scientific nature. Maximum reduction is rupees 3 lakhs. But the royalty income should not exceed 15% of the value of the book sold. And if any income is earned from outside India, then such income needs to be brought into India within 6 months from the end of the previous year. Now, royalty income received for brochures, commentaries, diaries, guides, journals, magazines, newspapers, pamphlets, or school textbook or other such similar publications are not allowed. So royalty income should be from book, and that book should be of literacy, artistic or scientific nature, or of royalties or copyright fees. Then similarly, we have got sections 80 RRB, which speaks of royalty income on patents. So any resident individual registered as true and first inventor in respect of an invention under the Patents Act. So an individual has to register himself as true and first inventor to claim the benefit of patent. Maximum deductions allowed is rupees 3 lakhs. Same way as in case of royalty on books. If any income is earned from any source outside India, then such income needs to be brought into India within a 6 months from the end of the previous year. Now, sometimes it's said that somebody is allotted the patent, and later on it is found that he had obtained the patent in a wrong way. He was not eligible to get the patent because that was not a patented product, or somebody might have already invented that product earlier. So sometimes it happens that after the patent is granted, it gets revoked. So if patent is subsequently revoked and the SSC had already claimed reductions in the earlier years, then it will be deemed that those deductions would be allowed wrongly, and recomputation of total income will be done again. So after say 3 years or 4 years, if it is found that his patent was wrongly allowed to him and now patent is withdrawn, so whatever deductions he had claimed towards the royalty income on patents would be revoked, and the recomputation of income will be done for that year as if there is no deductions under this head. Now, as we know that reopening is allowed up to 4 years. So for rectification, the period of 4 years will be counted from the end of the previous year in which the order for the revocation of the patent is passed. So rectification, if this is a old matter, so rectification will be allowed because the period of 4 years will be counted once again, and it will be considered from the date on which such revocation happened. Then we have got sections 80 TTA, which speaks about interest on deposits in savings account. Any individual or HUF is eligible. For senior citizens, there is another section 80 TTB. So any individual or HUF who earns interest on deposit savings account can claim benefit of this section. So deposits should be in a savings bank account with bank or post office or any cooperative society engaged in the banking business, and maximum reductions allowed is up to rupees 10,000. So interest on deposits earned in savings bank account, he will be able to claim reductions of rupees 10,000. However, if deposit is held by firm or AOP or body of individuals BOI, then any partner or any member cannot claim deductions in his individual name in his proportion. Like he cannot say that my share is 25%, so please grant me deduction up to 25%. No. If deposit is held by the firm, then he will not be, any partner or member will not be eligible to claim any deductions. Then similarly, we have got sections 80 TTA. I understand that my screen is visible, right? Then we have got similar sections, section 80 TTB. Which is for senior citizens. So here same way, interest on deposits in a savings bank account with bank or post office or cooperative society who is engaged in the banking business, but here the maximum reductions amount is rupees 50,000. So for senior citizens, the limit is 50,000, and for non-senior citizens, the limit is 10,000 rupees. Here also the same way, if deposit is held by firm, EOP or BOI, then any partner or member cannot claim the deductions. Then we have got sections 80U, which reduction in the case of person with disability. So any resident individual certified by medical authority to be a person with disability can claim reductions under section 80U. Maximum reductions is rupees 75,000. However, if the disability is over 80%, then the reductions gets increased to 1,25,000. So with this, we have finished various sections which are mostly applicable to individuals or HUFs. Now there are certain sections under chapter 6A which are applicable for any business or national undertakings who derive income by way of income from business and profession. So we will try to study the few important such sections. The one section is section 80IA. Section 80IA speaks about deductions in respect of profit and gains from undertaking engaged in infrastructure development, generation, generation or maintenance, or generation and transmission or distribution of power. Then we have got sections 80IAB, which speaks about deduction in respect of profit and gains derived by an undertaking engaged in development of SEZ. Then we have got sections 80 IAC, which speaks about deductions in respect of profit and gains derived by an eligible startup from an eligible business. Then we have got sections 80 IB, which speaks about deductions in respect of profit and gains from certain industrial undertakings other than infrastructure development undertaking. Then we have got sections 80 IBA, which speaks about deductions in respect of profit and gains from housing projects. Then we have got sections 80 IC, which speaks about deductions in respect of profit and gains from certain undertakings in certain special category states. Like here, Himachal and Uttaranchal have been defined as special category states where sections deductions under section 80 IC is provided. Then similarly, we have got sections 80 IE, which speaks of reductions in respect of profit and gains from manufacture of eligible items or carrying eligible business in northern eastern states. Then we have got sections 80 JJA, which speaks of deductions in respect of profit and gains from business of collecting and processing biodegradable waste. Then we have got sections 80 JJAA, which speaks about reductions in respect of employment of new employees. Then we have got sections 80 LA, which speaks of income from offshore banking unit and IFSC, that is International Financial Service Center. And we have got section 80P, which speaks about income from cooperative societies. And then we have got sections 80PA, deductions in respect of profit and gains from producer companies. So we'll try to study a few important such sections. First section is section 80IA, deduction in respect of profit and gains from undertakings or enterprise engaged in infrastructure development. The eligible activities are the developing or operating or maintaining infrastructure facilities, developing or operating or maintaining industrial parks and special economic zones, generation and distribution of power, and reconstruction or revival of a power generating unit. So any enterprise involved in such activity can claim deduction of 100% of such profit for 10 consecutive assessment years. Now, this 10 consecutive assessment years is not like that it will start from year 1. The SAC has got the flexibility to select any 10 consecutive assessment years, but the only criteria is it should not fall beyond 15th year from the year in which the enterprise begins operating in its infrastructure facility. So once the enterprise has commenced its infrastructure facility, its business, from that year up to 15th year, he can select any 10 consecutive years to claim deductions. Now, he cannot select, say, year 1, 2, and then 5, 6, and then 8, 9 like that. If he selects, okay, I will start from year 3, then continuously from year 3, 4, 5, like that, 10 consecutive years, he can claim deductions under Section 80IA. See, this benefit is given, the relaxation is given because sometimes it happens that in the initial year, the entity may feel that the profitability level may be lower and it may increase gradually. So to have the flexibility, they have provided that the SSE can select any 10 consecutive years up to 15th year to claim benefit under these sections. Then we have got sections 80IAB, which speaks about reduction in respect of profit and gains from undertakings or enterprise engage in development of special economic zone. So any developer of SEZ can claim deductions under these sections. Same like ATIA, here also 100% of such profits is exempt for 10 consecutive assessment years. And here also the flexibility has given that once his SEZ is notified by the central government, from that year up to 15th year, he can select any 10 consecutive years. So here the period of 15 year would be counted from the date, from the year in which the SEZ is notified by the central government. Then we have got sections 80IAC, which speaks about deduction in respect of profit and gains from specified startup business. Any company or LLP can take benefit of these sections, but the criteria is eligible startup should be engaged in innovation or development of products or scalable business model which has got high potential of employment generation. Now, the year in which the entity wants to claim these exemptions is turnover should not exceed rupees 100 crores. So if in any particular year his turnover is exceeding rupees 100 crores, then he does not qualify for deductions under this rate. Here, the is allowed 100% of profit for 3 consecutive assessment years out of 10 years. Like in the earlier case, we saw that the benefit was given for 10 consecutive years out of 15 years. But here, the benefit is only for 3 consecutive years, but the SSC, the company or LLP, has got the flexibility to select any 10 years out of 10 years from beginning from the year in which he started his startup unit. Then we have got sections 80IBA, which speaks about deduction in respect of profit and gains from housing projects. All SSCs engage in business of developing and building affordable housing projects approved by competent authority after 2016 but before April 2020. So they are eligible to claim deductions. Quantum is 100% of profits derived from such business subject to certain conditions, and where the gross total of income of the SSC includes any profit and gains derived from business of developing and building rental housing project, then he shall be allowed a deduction of an amount equal to 100% of the profits and gains derived from such business. So if is in the business of developing and building rental housing project, then also is allowed in deductions up to 100% of his profit. Then we have got sections 80JJA, which speaks about deductions in respect of profit and gains of collecting and processing of biodegradable waste. So any business enterprise who is engaged in the business of collecting and processing of biodegradable waste is eligible to claim reductions under these sections. Here, whole of the profit of the enterprise for a period of 5 assessment year from the year in which he commenced his business is allowed as deductions. So friends, here we under this chapter, deductions under chapter 6a, as I said earlier, it was a really simpler topic and which does not require much of deliberations, and we have tried to study most of the important deductions which are available under chapter 6a. The next section is section 80JJAA, which speaks about deductions in respect of employment of new employees. Now, when any recruitment of new or additional employees takes place, the SSC can claim benefit under this section. The idea is to encourage employers to hire new employees periodically. The main focus of this deduction is to generate employment in all sectors of the Indian economy. Like as I said in the beginning, the idea behind allowing any deduction is always from socio-economic angle. So when they speak of certain investment deductions or incentives for certain investments, the idea is to incentivize such investments in the economy. Here also the idea is to encourage the employers to generate more employment. Here the deduction is when new employment takes place, additional deduction of 30% of additional employee cost incurred in the previous year for 3 assessment years. So total benefit is 90%, including the assessment year relevant to the previous year in which such employment is provided. And deductions is available for 3 assessment years starting from the year in which the employment is provided. So to claim the benefit, the SSC must furnish Chartered Accountant's report in Form 10DA before the tax audit due date. So who will be here? We need to understand that the benefit is given if additional employment is generated. So first we need to understand who will be termed as an additional employee. The meaning of additional employees is employed throughout the previous year and whose employment has the effect of raising total number of employees employed by the company as of the previous year's last day, but does not include part-time employees. So suppose and there is someone has resigned and in his place a new employee has joined replacing him as the replacement of the employee who left, then it's not generation of additional employee. Additional employee should result into increasing or raising the total number of employees employed by the company as compared to previous year's last day. Further, employees earning more than rupees 25,000 per month are not included for this purpose for claiming deductions. So the idea is to generate employment for large number of people with a little reasonable or lower skills. So very high professionals who earn more than 25,000 per month, they don't fall under this category. फिर the employees for whom the government pays the complete payment under the employee pension scheme, so they would also not qualify. So, uh, sorry, they would be qualified. And then employee who has worked for fewer than 240 days. If somebody has worked for less than 20 to 40 days, and it's 150 days for business of manufacture apparel or footwear or leather products, and employees who do not have a PF account. So such employees would not be qualified under this head. Now, suppose it happens that if a new employee is employed for fewer than 240 days in the first year of work, but is employed for 240 days or more in the next year, then is considered to be employed in the following year. Suppose somebody joins, say in the month of March, so you don't have work for more than 240 days in that year, but he would, as he continues in the employment, he would have worked for more than 240 days in the next year. So he would be considered to be employed not in the first year, but in the following year. So with these major sections under which deductions is available under chapter 6A is covered. As this was a little easier topic, we have been able to finish, as I said in the beginning only, will not go, will not, will be taking much lesser time than the scheduled time. So with this, I have completed my presentations. If anybody has got any questions, they are free to generate, or otherwise we already have another important webinar which is already going on from our institute at the central level on anti-money laundering. So over to the participant. Is there anybody from the organizer?
Yes, sir.
हाँ, so I have concluded. We can close the session.
Okay. Thank you, sir.
Yeah.
Thank you.